Global financial turbulence deepens amid Trump's threat to escalate tariffs on China. The ongoing global trade conflict witnessed a sharp escalation on Monday as US President Donald Trump threatened to significantly hike tariffs on Chinese imports, jolting global markets and ushering a renewed fears of a recession. The announcement comes in response to China's retaliatory measures following earlier US tariff action, setting the stage for what experts describe as a high stakes showdown between the world's two largest economies. Trump declared that the United States would implement an additional 50% duty on Chinese imports starting Wednesday unless Beijing withdrew the 34% tariff imposed on American goods the previous week. These retaliatory Chinese tariffs were themselves a reaction to Washington's earlier reciprocal duties. In a characteristically defined tone, Trump announced via social media all talks with China concerning their requested meeting with us will be terminated. The statement sent immediate shockwaves through already fragile financial markets. A prior 10% blanket tariff had taken effect over the weekend, with even steeper duties now poised to come into force. White House officials have defended the administration's combative trade stance, portraying it as a bold recalibration of decades of globalization that they argue has undermined American industry. He is doubling down on something that he knows works. White House economist Kevin Hassett said on Fox News, referring to Trump's unrelenting approach. But he is also going to listen to our trading partners. China's response, characterized by some analysts as its most aggressive, yet included a blistering rebuke labeling Trump's tactics as economic bullying in an attempt to stem the hemorrhaging on of its financial markets, particularly after shocks in mainland China and Hong Kong cratered. Beijing Sovereign Wealth Fund intervened to restore some stability. Taiwan's stock market suffered its steepest single day decline in history, plunging nearly 10%. Backing in the US corporate titans sounded the alarm. JP Morgan Chase CEO Jamie Dimon warned of the long-term damage tariff could inflict, while billionaire investor Bill Ackman described the unfolding scenario as an economic nuclear winter. Elon Musk, a prominent Trump supporter and lead advocate of aggressive government spending cuts, urged zero tariffs between the US and Europe. The White House's response was dismissive. Trade advisor Peter Navarro derived Musk as merely a car assembler. Analysts and international leaders remain divided over whether Trump's tariff regime represents a strategic bargaining tactic or a radical realignment of global trade norms. European industries are trading cautiously wary of retaliatory measures that could jeopardize exports of key commodities like wine, cars, and electronics. Volkswagen Audi brand, for instance, has delayed releasing vehicles at US ports due to the new 25% auto tariff, while aerospace firm Homet is reportedly reviewing its shipping operations. Amid the chaos international diplomacy is steering, Japanese Prime Minister Shigeru Ishiba spoke with Trump by phone to advocate for a deal and hinted at an upcoming visit to Washington.